From Orange County and the campus of Chapman University, this is the Chapman Business Report.
Everything from the value, what would you pay for a sports franchise, how much would you fight to keep your sports franchise, Anaheim and the Angels, to the international economies with SEDB. On this segment of the Chapman Business Report, we'll go with the latter, the international economies, which, especially here in California with our export economy, we sell a lot to Asia, to Mexico. So let's start with Asia, Japan, China. What are we seeing there?
Well, Chinese economies are slowing down. Obviously, it was growing close to 10%.
No more double digits.
And then now most forecasts is between maybe 7 to 8, varies. But that should not surprise anybody. That's what I'm surprised. Everybody says, oh, Chinese economy are slowing down. I mean, they cannot forever increase double digit. If you remember, our economy 50, 100 years ago was growing,
you were
double
around
digit.
Then, I wasn't.
No, but at least I read history books.
Right.
So, I mean, Chinese grew fast, and partly because they had so much slack resources. They had the labor, they have capital went in there and utilized. So they were growing 10%, but it's going to slow down, and I would not be surprised 5 years from now their growth is going to be under 5%. But the impact is very significant. Remember, Chinese economy is true. We buy a lot from them, but they buy a lot from us, especially industrial machinery, electronic equipment, even food stuff. All of that is important to California. So that is a little bit of a dark spot in international trade.
There's been a little bit of a disappointment, though, in the amount of the Asian demand for domestic and for California.
Yeah, a little bit. Partly because of Japan. Japan's economy is still in doldrum. It's not growing as fast. They're doing anything possible, to stimulate that economy. They're practically printing money all over.
I thought I saw a revision to their first quarter forecast of like 6% growth, which is unbelievable for Japan.
Yeah, but that's probably is not going to be sustainable. But there are other signs that are good. Again, the most important one for us in California is Canada and Mexico. And both of those economies are going to do much better in 2014 than 13. Then the big question is going to be Europe.
Of course.
Eurozone.
We'd have started this discussion with Europe.
Exactly.
12 months ago.
18 countries, and those countries, majority of them are still in recession, are showing very slow growth. Although that particular area is not as important to California, only Germany shows up at the 10, the list of the top 10 exporting destination for California, but it's still overall, if the economy starts picking up, it's going to help the U.S. economy, it's going to help real GDP, it's going to help us. So that's one area that we're watching, and you know what they're doing now. They're basically bringing the interest rate not only to zero. Now, if the bank,
where else have we seen that?
If the bank put money, deposit with their central bank, European Central Bank, they're going to be charged for it. Which in this country, if a bank has an excess reserve and put it with the bank, central banks, they get paid for it. So basically, they're doing anything possible to increase business spending, consumer spending, get the inflation upward, and we think it's going to work. So we think Europe is going to gradually do better this year, and that's a good news for us again, particularly for the U.S. and obviously for us too.
In the short term, or currently, we've been the beneficiaries of the skittishness of the European, even what's going on in some of the Asian countries, because it's been a flight to quality.
Exactly.
Look at the yield on the price of our bonds.
Exactly. If you look at the interest rate differential, our 10-year bond is about 2.6%, 2.7%. Over there is under 2%. In Germany, for example, is 1.7%. So that helps, money to flow in our U.S. bonds, keeping interest rates down for us, particularly mortgage rates, and that's helpful. However, the worrisome is you can't count on this interest rate differential. It is better if their economy does better and the interest rates starts going up, we go back to normalized economic condition, and that by itself, the interaction of trade and investment is going to be more beneficial than this kind of a flight to safety that we're seeing. I
want to get your take, switch topics, and talk about all these big mergers that are either pending or being fought out. In the case of Allergan and Valeant, Allergan's our biggest public company. Valuation, who would have thought? Tremendous growth. It's a great story, almost being valued by the company that wants them at almost $50 billion. And then the other mergers, for instance, Time Warner Cable being sought after by Comcast, the biggest issue might be regulatory.
Yeah,
Some are arguing that one should be nixed. AT&T DirecTV, also about $50 billion. First, why, and I want to get your take on the importance of keeping a large headquartered company here, but why all these mega mergers?
Two factors. One, remember, stock of a company is their currency. So stock market has done excellent. So basically what they have something that they can use their stock in terms of buying or merging, other companies, because in some of these is cash and stocks. So they use these really high valued stocks to pay for these companies. Second, which is very important, money is very cheap. They can go out and borrow practically as nothing and put that together with their stock and start buying different assets all over. And some of it is obviously vertical integration, and some of it, in case of like Allergan, is horizontal. They just want to expand their product line, and Allergan has few products that are very unique, very attractive, and they want to grab it. So the reason you see merger activities, some people, by the way, warn me when I say this. It says, whenever you see too much merger activity, is the end of the stock market.
It's either that or my broker friend used to say it's when his grandmother calls up to buy stock.
Exactly. But the reason is happening, as I said, higher stock values and cheap money, and they're grabbing assets. But the negative, you alluded to it, Allergan is headquartered in Irvine. Not only they employ,
and its would-be suitor is a Canadian company.
And in all likelihood, if that goes true, we're going to lose tons of jobs. But they're going to consolidate. And always, when you lose headquarters, has negative stigma. I shouldn't say negative stigma. It has a stigma attached to it, and partly because these headquarters support community in a number of ways. Supporting, for example, Chapman University. So I do not like to see these headquarters disappear, and unfortunately we're seeing more and more of that. For example, you didn't mention Toyota moving out of Southern California.
Sure.
That was not result of a merger, but nonetheless is losing a major player out of the region is not a good news.
To catch more of the Chapman Business Report, visit chapman.edu/CBR.